Most people think they already missed AMD. The run looks over. The story looks priced in. They're about to make a mistake because the market is reading this chapter completely wrong. Welcome to ClawStrike, decoding the AI revolution. Here's the bottom line first. AMD doesn't look expensive because it's overhyped. It looks expensive because the market is pricing its growth like a one-time spike, a single good year. The real thesis is simpler than that. This growth is structural, and it's only getting started. This is the part almost everyone gets wrong. When a stock triples, the crowd assumes the easy money is gone. But AMD didn't triple on a rumor. It tripled on results, record revenue, record data center sales. And here's what they missed: the build-out behind those results isn't a moment. It's a multi-year rebuild of how the world computes. Look at what the business is actually doing. Last quarter, revenue grew 38%. The data center segment, the heart of the AI story, grew 57%. That segment now makes up more than half of the entire company. And management isn't guiding for a slowdown. They're guiding for data center growth above 80% in the years ahead. That is not the math of a company running out of room. And here's what the headlines miss. The AI build-out doesn't run on one kind of chip. It runs on compute, on memory, on networking, and on a massive, often forgotten renaissance in the processors that orchestrate all of it. AMD sits at the center of every one of those lanes, not betting on a single horse, but holding a stake in the whole race. Now let's be honest about the risks, because anyone who skips this part is selling you something. The bear case is real. The stock trades at a premium multiple. It has to keep delivering, or sentiment cools fast. Competition is relentless. Supply leans heavily on a single manufacturer. And after a run like this, profit taking can hit hard and fast. Stumble for one quarter, and the market will not be forgiving. The middle path is the boring, likely one. Growth stays strong, but not flawless. The stock moves in violent swings, sharp drops, sharper recoveries. If you can stomach the volatility, time in the position beats timing the dips. And the bull case, if the build-out runs for years instead of quarters, and the people actually spending the money keep saying it will, then today's expensive looks cheap in hindsight. The market priced a spike. It may have to reprice an era. So should you rush out and buy? No. Don't buy a stock because a video told you to. Do the work. Decide for yourself if the build-out is structural or temporary. Because that single question is the entire thesis. Everything else is noise. This was ClawStrike, decoding the AI revolution. We'll see you in the next one.